US futures hold steady after stocks on Wall Street end the session lower. The S&P 500 and Nasdaq pull back from the record highs. The Dow sheds nearly 250 points as the government shutdown completes its 9th day. Asian markets are also lower, tracking losses on Wall Street. The GIFT Nifty is indicating a marginally downward start for our own markets as well. Oil prices edge lower as geopolitical tensions in West Asia ease. Meanwhile, gold prices have also declined as investors book profits on the back of the Gaza ceasefire. TCS surpasses estimates in the second quarter. Margins and constant currency revenue growth beat expectations. The company also announces a massive plan to enter the data center space with an aim to build up to 1 gigawatt worth of capacity. Also says that it will be aggressive in terms of acquisitions going forward. And Prime Minister Narendra Modi speaks to US President Donald Trump to congratulate him on the success of the Gaza peace plan. The leaders also review progress in trade talks. Following this, US Treasury Secretary announced that India would soon be buying less of Russian oil and favor US oil. It's the final trading day of the week and lots to track in the day forward. You're watching Power Breakfast right here on CNBC TV18 in the Mumbai News Center. I'm Hormuz Fatakia. Let's first take a look at how the Asian markets have started off. It's a slightly red screen on the Asian markets. The Taiwanese index remains shut today, so that is not taken into account. But the Nikkei, after 7 days of non-stop gains, is seeing some bit of profit booking now, 0.2% lower on the Nikkei. The South Korean Kospi has also resumed trading, and the Hang Seng, continuing to trade with losses of over 1%, was down yesterday as well and continues to extend those losses. The Shanghai Composite 2 trading with losses of around 0.5%. So most of the Asian markets that are open are trading with a color of red at the start of the final trading session of the week. But pull up the GIFT Nifty as well and give you an idea of how our own markets are likely to start off, where they've trimmed some of those losses. The earlier ticks were showing a downtick of anywhere between 35 to 40 points. Now that has come down to around 19. So expect yet another subdued start to the trading session, but it will be interesting to see how the session pans out. And contrary to what was happening in the last 2 days, our own markets did fairly well for themselves yesterday, and we'll set you up for today's trade with our research team as well. And if you see the last 2 trading sessions before Thursday, you would see that the Nifty made highs and then fell off those highs and ended near the lowest point of the day. Yesterday was the flip side of it. You made the intraday low earlier in the day, and then we recovered from those lower levels and managed to close near the highs of the day. And after 3 days of declines, the advanced decline ratio was also in favor of those that were in the green, only by just, but it managed to green nonetheless. The big focal point today will continue to remain IT. It has continued to remain so through the week as well. The IT index is up 5% this week, and today's reactions will all depend on how TCS reacts to its second quarter results. The stock has gained in 3 out of the last 4 trading sessions this week, continuing to rebound from its 52-week low, and it will be interesting to see how the stock moves. Both Infosys and Wipro, the ADRs in the US market, did well in yesterday's trading session, so we'll watch out for that and the reaction to other large cap IT stocks as well. Now, the key levels to watch, of course, today is the Nifty. Yesterday made a higher high and a higher low with a very small margin, but it did manage to do that. So this 25,200 to 25,250 zone remains that resistance band. Tuesday's high, which is 25,220, is an important level to watch out for on the upside. Now that 25,050 to 25,000 range on the downside will continue to offer support. So with all the action on the Nifty IT index, the Nifty Bank has taken a bit of a back seat, and it was an underperformer yesterday as well, but it managed to hold on to that 56,000 mark. And despite that, it continues to remain set for a 5th weekly advance in the last 6 weeks. Another IPO opens for subscription today, the Canara HSBC Life IPO. The LG IPO saw a record 4 lakh plus crore worth of bids, and as subscription closed yesterday, the overall subscription figure stood at 54 times for LG. WeWork India is going to be listing today. It was a subdued subscription there. It was only because of the institutional investors that the IPO was fully subscribed, so keep an eye out on that. And of course, we'll watch out for Tata Elxsi and the reaction that its peer groups stocks like KPIT Tech and Tata Technologies will have as well. But for now, the GIFT Nifty is indicating a subdued start for our own markets. Around about a 30-point downtick is what the implied open is suggesting. Over to Ria now, who would list out the stocks you need to keep an eye out for today. Ria, good morning.
Good morning, Thomas. Let's start off with TCS. After reporting its Q2 numbers, the constant currency revenue growth has come in at 0.8% this time around versus our poll of 0.3%. The company has also announced strategic investments as well as a new business entity to build AI infrastructure. They will be building a 1 gigawatt capacity of AI data centers in India going ahead. Pesa Capital also comes out with its Q2 numbers. The net profit has gone down by 57% on a year-on-year basis. And for Tata Elxsi, the net profit has gone up by around 7.2% sequentially. Moving on to the business update for the month of September for M&M, the total sales volume has gone up by around 14% on a year-on-year basis for this one. Afcon's infra will also be in focus. They have bagged orders worth roughly around 576 crores. NTPC Green has signed an MOU with the Gujarat government to develop 15 gigawatts worth of renewable projects. Natco Pharma is another one to keep your eye out on today. The Delhi High Court's Commercial Appellate Division has dismissed an appeal filed by a Swiss pharma company. They have now cleared legal proceedings for the company to launch the generic version of a drug called Risdiplam in India. Moving on, RailTel will also be in focus after receiving an order from the Karnataka government, and Lloyds Engineering has entered into an MOU with Flyfocus for next-gen UAV defenders. And lastly, life insurance companies will also be in focus on the back of the September data.
Riya, thank you for that update. We'll keep an eye out on all these life insurance companies as well in today's session. Lastly, Sudarshan joins in with cues from the F&O space. Sudarshan, good morning. Some recovery from the lows yesterday, but what's the F&O data indicating?
So F&O data is indicating that it's a key question now, that are we ready for a big move? And the question this I'm asking because first, we are seeing a big short covering as far as the options data goes. Second, FI shorts still around 93%. So if there is a positive news flow, we might see a huge short covering. And yesterday, one of the biggest Nifty contributors, that is the TCS, has come out with its earnings, and earnings were not that bad on most parameters. Company has reported earnings that look largely in line with estimates or slightly better. Another big stock is Reliance Industries. It's trading near very important levels of 50-day moving average of 1386. If it firmly closes above that, we might see a big move in that stock as well. And next week also, company is announcing its earnings. So yesterday, from the day's low, we see a big recovery, and at the end, Nifty managed to hold the level around 25,200. So now the range for Nifty, major range, support range is 25,000 to 25,200. Even Nifty IT ahead of TCS earnings saw a big recovery, and biggest two gainers were TCS, HCL Tech, and also Infosys managed to gain from the lows. GIFT Nifty, like last 4 days, again, it's indicating a start with minor cuts, currently down 30 points. FIs and DIs continue to see buying in both futures and derivative market. Long exposure remains around 7%. Yesterday, FIs have reduced short position to more than 3,000 contracts. Now look at the options data, what has happened. On the call side, all the major call options have seen shedding off in the open interest. At the same time, premium has seen a huge rise, but on the put side, there was a huge addition in the open interest, but premium has come down. So support for Nifty, 25,050, resistance 25,250, next resistance 25,400. Nifty Bank support 55,740, resistance would be 56,400. RBL Bank remains in the band. Fresh longs, two stocks, MCX and BSE has seen short covering.
Capital market names did very well yesterday, Sudarshan. Thank you for that update. Now on to the big earnings reaction today. TCS beat expectations in the second quarter. Margins and constant currency revenue growth exceeded expectations as well. Rima is joining in with a breakdown of how the numbers were. Rima, morning.
Hi, good morning. So, as you rightly pointed out, for TCS, it was a better showing on revenues and margins. The constant currency revenue growth came in at 0.8% ahead of expectations. Margins came in at 25.2%, expanding 70 basis points on a quarter-on-quarter basis. Remember, in July, the company had announced that they will have to let go 12,000 people, employees, as a part of just reorganization of the company. Now, because of that, they've done about 6,000 of the planned 12,000. And that has resulted, because of severance pay, etc., a one-time restructuring expense of 1,135 crore. And that's the reason why you would see profits are down 5% on a quarter-on-quarter basis. But, these are numbers, instead of, say, growing 0.5, you're up 0.8%. I think what the street is going to focus on is some aggression shown by the company. There are new announcements. So I think that's what the street might focus on. They've said that they will build a 1 gigawatt capacity AI data center in India. They've announced an acquisition of List Engage for $72 million. It's a small acquisition, capability-led. but just the fact that this was a management, this was a company which was very conservative, and now they are taking some steps to participate in the entire AI ecosystem. In fact, the management says that we want to be the largest AI tech-led services company in the world. Also, the company said that FY26 revenue growth ex of BSNL, the international revenue growth, will be better than last year. They've been saying that. They reiterated that. They say they want to participate in the adjacencies in the ecosystem, which is why the entire data center play, and they will be aggressive, very aggressive in terms of acquisitions going forward. Jeffrey says that, it all depends on execution. This is all nice sounding, but it depends on execution. And they believe the data center will add limited upside. Nomura says it's unclear how the data centers, the ROEs of the data center will be similar to the existing business. The existing business enjoys high ROE, but data center business is capex incentive, capex capital intensive, and therefore the return ratios could be lower. But CLSA says TCS is showing clear signs of aggression with proactive decisions around restructuring of the workforce, being acquisitive in the future, and plans to create that 1 gigawatt data center capacity. It will drive earnings growth, but it will alter the company's return and free cash flow profile. Back to you.
Rima, thank you for that update. We'll also be in conversation with the management in just a few minutes from now. Take a short break, get you all the developments from the White House in our special segment, Trump Watch, on the other side. Welcome back. Now on to action from Wall Street. The indices ended lower in yesterday's trading session. Both the S&P 500 and the Nasdaq pulled back from their record levels, and the Dow Jones was the underperformer, ending 250 points lower. The federal government shutdown has now entered its 10th day, and there are few signs that the Republicans and Democrats are making progress on negotiations. Now, former Fed Vice Chairman Roger Ferguson has said that the Fed faces a deep uncertainty on inflation going forward. Listen into what he had to say.
Look, I think you can phrase it that way, and the bigger point is the one that you made. There's so many questions up in the air, and most importantly about the things they care most about, which is the state of inflation. You saw some of them say inflation would be back to closer to 2% if it were not for tariffs. Others saying absolutely wrong. I think they're all focused on the labor market. I don't think it's so divided as just very uncertain. So you can certainly call it a healthy debate, but at the end of the day, this debate has to be resolved. And so that's the issue that markets and always are focusing on, how they're going to resolve this, as you describe it, healthy debate or this division. Well, I think they're going to have a healthy debate, to use a phrase of, given that we're data dependent and there's no data, given that we came in being sort of undecided and divided, it wouldn't be off the table to say maybe we should take a pause.
Over to Dia now, who will take us through our latest segment, Trump Watch. Dia.
Good morning. U.S. President Donald Trump is escalating U.S. diplomatic efforts on multiple fronts. Trump said Thursday that Washington and its NATO allies are stepping up the pressure to end the war in Ukraine after his recent outreach to Vladimir Putin failed to produce a ceasefire. Now, the announcement comes just days after Trump brokered a ceasefire deal between Gaza and Hamas. He also said he plans to leave for Israel on Sunday to be present for the release of hostages under the terms of that deal to end the war. Now, as preparations for that deal continue, U.S. defense officials are outlining Washington's next steps in Gaza. U.S. officials said Thursday that the American military command responsible for the tensions will play a role in Gaza's transition once the peace deal is finalized. However, they clarified that the troops are not intended to be deployed on the ground in Gaza itself. Meanwhile, back home, Trump's use of federal and state forces has come under judicial scrutiny. A federal judge on Thursday ordered a temporary halt to President Trump's deployment of the Texas National Guard to Chicago, a move that went ahead despite opposition from local Democratic officials. The order pauses further deployment pending court review. At the same time, the U.S. Treasury is tightening sanctions on networks linked to Iran's oil trade. The U.S. sanctioned more than 50 individuals, companies, and vessels involved in exporting oil and liquefied petroleum gas. That's all for today. Now back to you.
Dia, thank you for those updates there. And the big other development was the fact that Prime Minister Narendra Modi held a phone conversation with US President Donald Trump, congratulating him on the success of the Gaza peace plan. The two leaders also reviewed the good progress achieved in trade negotiations and agreed to stay in close touch over the coming weeks. Now, remember, this is the second phone call between the leaders in the last 3 weeks. Meanwhile, US Treasury Secretary Scott Bessent, in an interview to Fox News, said that India is set to buy less Russian oil and more US crude in the coming months. Listen to what he had to say.
We're doing a lot on Russia, but the real culprits here have been China and India in terms of buying Russian oil. They are keeping the Russian war machine going, and we put a 25% Russian oil tariff on India. And I think soon we're going to see a rebalancing where they're buying less Russian oil, more American oil. And if we were to do the same thing on China, I think the war would end quickly, but we need our NATO or European allies to join us. It's my strong belief that India is going to start rebalancing over the next few weeks and months, and we will see a diminishment of Russian oil in favor of U.S. oil.
Take a short break. Cues from the commodities market on the other side. Stay tuned. Welcome back. Manisha Gupta now joins in with all the updates from the commodity space. Manisha, good morning. The oil price is holding on to some losses, but some profit booking in gold as well.
Well, yes, overnight has seen some declines coming in for the precious metal prices, but I want to start with silver because this is clearly has been an outperformance that we've seen coming for the silver prices. 51.5 almost done, and it's an all-time high for silver, so much so that we're looking at shortage of freely available silver, not just in the London market, but for the Indian markets as well, leading to various Indian ETFs now suspending buying new lump sum investments in silver. In the physical markets as well, people tell me that if you ask for a delivery for silver today in sense of bullion, you are perhaps getting it a week later and much at a premium. That is the kind of investment that we are seeing at all-time highs in silver as well. For gold prices, yes, there is a bit of a profit taking after we did that 4,059 of an all-time highs. But the markets after that profit taking in the last couple of days has started to surge up yet again. There is demand now coming in from China since that country is back from its Golden Week holiday. So some support continuing yet again in precious metals. A quick word on the metal prices right now because we're looking at multi-week and multi-year highs onto this one as well. So after copper, aluminum and zinc gaining, it is now nickel which is trading at a 15-month highs. So metals is where the newer money also seems to be coming in.
Manisha, thank you for that update there. And in some somber news, pressure cooker pioneer T.T. Jagannathan, the chairman emeritus of the TTK group, passed away late last night in Bengaluru. He had served on the board in various capacities, including that of managing director and executive chairman. Often referred to as the kitchen mogul, he was instrumental in turning around the TTK group.